What's going on, guys? Welcome back to the case study. I haven't done one honestly a couple days now, maybe even a week, because it's just the sole fact of I like making these rather newer case studies when stuff is just super clean, and there's like really good things to go over and cover. Which was Friday on NOS for a good example. Yeah, I have a couple good examples. I actually took two trades. One of them hit break even, which was a little bit of a frustrating one, but I'll discuss why um, why I managed it, how I managed it, and why I was able to take another entry after the break even hit. But yeah, some good things to cover for sure. So starting off here on NOS on the 4-hour time frame. Okay, so let's mark out everything we see, what's going on here. All right, so Wednesday. Wednesday, we had that move that actually ended up trading us above these highs here. Why is this important? Well, every time we take a high, it tells me that buyers are now induced in the market. Okay, which low led to this high? It was this low. This tells me I do not want to be buying below these, or sorry, above these lows here. Okay, because this is now trading with retail, and this is going to be low probable trading. Sometimes we'll respect it, sometimes we don't. We only respect it when we need to build liquidity in the market. Okay, so you can see how we built liquidity here, but then the market trades right through it. So now we're interested in buying because this is when the actual move will take place. Okay, so we trade through this low, which tells me higher time frame. We've now trapped buyers. And if you look to the left, look how we've now taken that inducement low, which is probably most likely printed as our extreme. Now we just have to wait and see what the 5/15 will give us for entries, right? So the market prints this low. This is on Thursday in New York. Okay, we get a big rally up, respecting this inducement high to the left. So we can mark this out here. Okay, we're not interested in selling below this high. The market respects it, comes down, prints this low. And now we're in London. London gives us a move to the upside, taking out these highs, which is now trap sellers and induced buyers. What are we going to be doing? We have the option of selling into the inducement low, okay? Or you simply just wait for the inducement low to get taken. And then you need to wait for price action below it. So anywhere we go below it, this is where we're going to be using the lower time frames to find ourselves an entry and targeting this high here, and eventually this high here, and then the high that we got up here, okay? Because since we've taken out this low, who is going to be interested in selling these areas here? Sellers, okay? But we'll get to this in a moment here. Let's continue on with current price action. Okay, so how did I go about trading this? Well, now we are in New York session on Friday. We've taken out this low, which tells me we've trapped buyers, we've grabbed liquidity. Now we need the lower time frames to allow us to give us an entry, right? So first we get a push from here to here, taking out this high here, which is now given retail their break of structure, which tells me this is going to be a trap. Okay, so we want to see this taken now. Okay, and then what do we see right below that after this low is taken? Well, if you look to the left, we got a liquidity block. So what can we expect? We can expect price to most likely trap buyers because we're not going to be buying above this low, running down, maybe tapping this liquidity block, and then we could see possibly that move to the upside, right? Most likely to this high, but since we don't really have liquidity at this high yet, what can we expect most likely? Anticipate false reaction and maybe continuation, something like that. These are just ideas, right? These are things you just want to anticipate. So when they do happen, you're not going crazy, right? Over these pullbacks, etc. So market chills, respects that area for a little bit, and then I think, yeah, that stock open spikes right into our area. Here's the entry. Stop goes below, and where are we targeting? This will be our first target here. Okay, so let's go to the 1 minute and see what's going on. So we tapped into that liquidity block. We get a sharp reaction from it. Now look what we're doing. We are building liquidity at this high here. Okay, this is where sellers are interested in selling. So this is going to be where liquidity is being tucked. So essentially, anyone interested in selling these things are going to be entering here, and their stop loss is going to go above this high to the left. Same thing, just on the opposite side of the market. Okay, so now we're building even more liquidity. We actually take out previous low, which has now induced even more sellers into the market. Okay, now we've taken out this high. So why is this important? Well, since we've taken out this high, retail now sees this as, look how we get low, high, low, and then we take this out. This is their break of structure, which tells me we do not want to be buying this thing above this low. So since my buy position is now at risk of getting ran, what do? Roll that stop. Okay, cover your risk. Well, however you like doing it, you have to reduce the risk somehow, because now with the knowledge of us taking this high and our entry being at risk of being tagged, you want to be able to manage that position. Okay, so roll that stop. And that's exactly what I did. I rolled that stop to break even. And as much as it was a frustrating one, because I actually was up quite a bit on this, came back down and tagged me out. You got to be able to stay numb in these times. I mean, it's easier said than done. I was a little bit more of frustration, I guess you could say, was something I was experiencing at the time. But you got to be able to react and anticipate these kind of things, right? So now we're running back to our entry. We've tagged this out BE. We have this liquidity point to the left that we want to get taken, okay? Because this is where the reactions came from. We run that. Perfect. Now we want to see some sort of entry given to us. All right, so we've taken out, okay, so sorry, step one. We've taken out this high here, which is now what? Induced buyers. So now we wanted to see buyers trapped, okay? We come back down and take that low out and also the low from the left, which tells me now we got no liquidity below here. Perfect. This is now looking like an entry, a buy entry for us. We got a liquidity block right here, an inducement high that we're respecting right now. So what I wanted to see was we could either run the inducement high, get something like this possibly, run the inducement high, come down, respect this, okay, and then maybe print another high, which allows us to take an entry down here. Why? Because buyers are going to be looking to buy this thing right here. They get taken out, and we can take the entry, okay? So that was one opportunity. The other one was we just respect the inducement high like this, pull back to our liquidity block, and then we can go. Okay, so it all depends what kind of entry we get here. Those are just different options, I guess you could say. And I believe there was some sort of like 11 a.m. there was like Powell speaking or something, and we get this little spike into our liquidity block. There's our entry, and you can see it's right below this 1 minute low. Imbalance is below it, so we take that entry like that, and stop goes below. Now, where are we targeting? Well, we have this as our first target. Go to 15. Okay, that as our first target. Then we could target here, take some more off the table. And then eventually we have that more structural point. The reason why I'm telling you mark this one is because after this high is taken, since this whole red box up here is a liquidity block, a higher time frame liquidity block, we understand that since there's going to be no liquidity above it yet, what can we anticipate? Well, maybe we can build liquidity here. Then we can get false reactions, respect that to induce buyers, maybe take them out, and then we'll get that continuation. So since we can expect bearish price action above this high, and we can anticipate that, you want to be able to take partials, pay yourself, okay? So those are my future targets. I'll play the rest of this out. Actually, I'll just cancel replay. This is what we ended up doing. Taking out that high, and then going to the end of Friday price action, we just started squeezing, and then obviously momentum and volume dies out, right? So there's nothing for us to do here. I took partials above this high here. Oops. I took partials above this high. I'm going to hold more to here. And then probably when we get to this, I'll close out of like probably 80% to 90%. And then I'll just hold the rest of this point up here. After we take this out, it doesn't matter where we go because the whole setup is going to be completed, right? But yeah, that is basically how I took everything here. Again, that break even was a bit frustrating, but you got to be able to react and adapt to these certain things, right? We're not going to be perfect all the time in these markets, so we just have to be able to anticipate. what happens going forward. All right. So I hope you guys enjoyed this case study, and I'll see you guys in the next one.